In this video, we are going to look at how we can avoid false breakouts in the market. False breakouts happen when the market moves in a manipulative way to trap traders in the opposite direction to where the actual move is going to happen. So buckle up, get your pens and notepads, and let's get going. Let's go onto the charts. Remember, guys, if you're new to the channel, do leave a like on the video, subscribe, and also comment down below. So without wasting any more time, guys, let us go onto the charts. But just before we go into the charts, please, guys, you've been asking me which broker I use. I have at least 3 brokers that I use, with all the links in the description of this video. If you sign up using my links, guys, I'll get a small affiliate commission. So you'll do well to support the channel by using the links in the description of this video. So guys, let's go now onto the charts and I'll show you how to avoid these false breakouts. Let's go. So as you can see, guys, we are on the chart. We are on the GBP USD chart. So what I always do, or what I always advise people when I'm teaching them how to avoid false breakouts, is you need to look at the current trend or market structure, what the market structure is doing. Is market structure bullish or is market structure bearish, or is it consolidating? So I'm going to show you within this area, an example within this area. Okay, so what you always want to do is you want to look at the market creating a high, a low, higher high, higher low, higher high, higher low. Okay, higher high, then it pulls back, makes a higher low, lower high, lower low, which is a break of this structure here, lower high, the lower low is here, it's a lower high, higher low, higher high, then a break to the downside. So let me zoom in big. What you're seeing here is market structure, and market structure is king. Okay, market structure is created by price action. So when you want to learn how to trade more profitably, you want to consider market structure and what's the type of market you're trading in. Is it a trending market? Is it a consolidating market? By trending market, I mean, is it creating higher highs, higher lows for a bullish market? Or is it creating lower highs, lower lows for bearish market? Or is it just creating equal highs, equal lows for consolidating market? So you want to consider that. After you've considered that, you've checked if your market is making higher highs, higher lows. What you want to do, for example, we are trading in this case here, right? What you do is you mark out those areas. Like for example, here, I would mark out this area as a low. I'll mark out this also as a low. Okay, I just want to mark out this area so that when we come back and do our analysis, when I explain to you guys how you can avoid false breakouts, you'll be able to know how you can avoid those breakouts. Okay, let me just show you this thing. I know that, guys, when you learn this, it's going to change the way you see the market, and hopefully you guys will be able to understand how the market works. Okay, so you've drawn this level. Let me take this out. You've drawn this level like this. You've drawn your levels. Okay, these ones have not yet happened. Let's consider this area here. Okay, let's consider this. I'm just showing you this in hindsight because, guys, I can't show you this on current market because it will mean that I'll have to record the video over a long period of time for us to wait for the data to come in. So that's why I show you the historical data, so that you guys can go and do yourself justice by backtesting and forward testing this on your own. Okay, so assume this is the most recent low. Okay, this was the most recent low, and then price comes and takes it down by this bearish candle. Okay, so what do you do? What do you do at that point? What I always advise is, after there is a break of structure like here, let me zoom in really big so that you guys can see. Some of you guys complain that you don't see the chart clearly, so I've decided to use a white chart today for you guys who have been asking for white chart background. So I hope you guys see clearly here. So this is the most recent low. This bearish candle breaks that low. Okay, breaks that low. So how do you confirm that this is not a false breakout? how do you confirm that this is an actual breakout? What I do is I wait. Normally, what I advise is that wait for the market to create some sort of a pullback into the breakout level, give you some confirmation candlesticks, and maybe you can see the market continuing in the direction of the breakout. That is if there is no false breakout. Okay. If there is no false breakout, the market will give you a continuation pattern, right? So let me show you that here. You see here, the market breaks out. Most of the traders who get caught up in this kind of trading, they enter here, place their stop loss above this breakout zone, and you can see the market pulls up, takes them out. Okay, market goes and takes out these traders. So to confirm this breakout, you want to wait for the market to create a sort of a retracement. So you see here, market creates this retracement. You're looking for candlestick formations for it to confirm this move to the downside. Now, which candlestick formations are you looking for as confirmation? You're looking for bearish engulfing candles. You're looking for evening star formations and other candlestick patterns or chart patterns around the retracement zone for you to be able to jump in on a trade to continue to the downside. Now here, what we see here is we get a confirmation move with this big bearish candle here, okay? This big bearish candle here, right? Which engulfs all these candles. You can enter on a trade after the close of that candle, and then you can place your stop loss, okay? Your stop loss just here, or let me see. You can place your stop loss at the high here, the previous lower high, which is this one here. After you have placed your stop loss at the previous high, which is this one which has been created here, then you can target your 1 to 2. Okay? Target your 1 to 2 risk to reward ratio like this. You can see the market retraces again, but it puts you in profit. Now, let's go ahead and look at this breakout here. Okay, this breakout happens on this bearish candle here. This candle here creates a breakout below this low. Okay, because you see that these are lows, right? This is the first low, which was broken, right? This is the low that is going to be broken now, that I'm explaining to you. This low is broken by this candle here. This candle closes below this low here. You don't just jump in on a trade here, okay? Because if you just jump in on a trade like this, you will put your stop loss above here like this, and then you'll be stopped out, okay? You can see. But if you wait for the market to create some sort of a retracement after a breakout, it will confirm to you that the breakout is valid. False breakouts happen when the market moves in a manipulative way in that direction to entice traders to jump in onto that move, and then it effects out and moves in the opposite direction. I'll show you an example just now, just after this. You see here, if you enter here, you'll be stopped out. So what you want to do is wait for market to pull back into this area and give you a candlestick confirmation here, which in this case is this candle here, which gives us a bearish engulfing here, okay? Then now you can place your stop loss just above the high, which is this candle, which creates a small high here. And then you want to target your 1 to 2, okay? You want to target your 1 to 2. You can see that you would make this profit, right? So after this move has happened, this market creates a new low, which is this one, okay? This is a new low. So this low, the market goes and creates a high and creates another low high here, okay, which is this one here. That's a higher low. After it has created this higher low, it goes and takes out this high, okay? Remember that this is a high here, okay? Maybe we can use here green color just to distinguish, and then we can make these ones red to denote the lows, right? Those red ones are the lows, okay? I hope you guys are following, right? I hope you are following. Okay, so this green one is the high that is taken out by this bullish candle. Now, this is a breakout. This is a breakout candle here, but it is a false breakout candle. The reason why I'm telling you it's a false breakout candle is because after this candle here breaks out, just assume many traders, because they see this momentum, they jump in on a buy there, okay, at the close of that candle, stop loss below this zone here, and then they are targeting maybe a 1 to 2 or so. You can see how the market pulls back and takes them out, okay? This is not the way you trade breakouts. Wait for a market to pull back into that zone, and hopefully when it pulls back into that zone, you get maybe a confirmation candlestick, like a bush engulfing, or any other candle stick pattern, morning star formation, to go in the direction of the breakout. But in this case, you can see that this was a false breakout, because even when the market has pulled back, okay, market pulls back, but it does not stop here to give us a confirmation to go up. Instead, what it does is it goes beyond and even breaks the low, previous low, which is this area here, confirming that this was a false breakout. Okay, so let me just delete these guys. Now, when you're trading against the false breakout like this, wait for it. Now, in this case, if you were trading here, you'd have lost. But if you waited here, the price would then come and break below this low, okay? To break below this low and also break below this previous low, taking out two lows, confirming that the price could be continuing to the downside. Here also, you don't just jump into, for example, a sell here. Don't just jump into it, okay? I know this would win, but don't just jump into it. Wait for the market to retrace. Look at how market retraces with this green candle here, okay? And then after the green candle gives you a bearish engulfing. You want that kind of confirmation for it to enter on a continuation to the downside, okay? So here you can see that the market gives us bearish engulfing. You can then now put your stop loss either above this high or above that that low, okay? Above this low or above this low. Just place, okay, let's place it here, and then you can target a 1 to 2. When you move this forward, you can see that you can make your profit there, okay? I hope you guys are seeing this, right? Now, even if you went ahead and looked at many more examples, for example, here, you can see here, this was also a false breakout. This was a false breakout. The false breakout, because when the market pulled back down, it did not give us a confirmation to continue up, okay? That was a false breakout. I want you guys to go and try to backtest this, okay? Backtest this. Now, for example, here, the previous low is this one here, which you're waiting for. When the market comes back down here after this false breakout here, it breaks below this low. You don't just jump in on a sell like this, okay? Don't just jump in. Wait, be patient. Market will pull back up, because if you take a trade there, you can see that yes, you would win this trade, but it would give you some pain, okay? You would see this drawdown here and you'd be in pain, right? So what you would do, wait for it to pull back up, give you some sort of a bearish engulfing. You could take a trade here or even here, okay? Like now here, you can take a trade here or here, but I would prefer to take a trade here because this engulfing candlestick also has a morning star formation. So if you took a trade here, we put our stop loss safely above that area there, and then we are looking for a 1 to 2, okay? Just look at how this kind of trading can save you a lot of money, okay? Now let's look at this just briefly. You see this is a previous high. This is a previous high. Market reaches there and gives us this breakout candle, okay? This breakout candle, don't trade it. Wait for the market to pull back and give you some sort of a candlestick formation. Now here you don't get a candlestick formation, you wait patiently, market comes back here and gives us this long wick candle, rejection wick candle. After that, it gives us 1 2 3 bullish candles. Okay, you can trade that area, because now if you enter here, you're entering way above the entry zone, which would be at this level here. That is why this trade would have not been the ideal one. We could have taken the trade on this bullish engulfing when the market pulls back to this area after the breakout here, and then the stop loss would be ideally below this zone here, and then yeah, this one would have been a better way to enter, like from here. Okay, or even here you would enter another trade here, and then you put your stop loss just below the zone, and then you would target a 1 to 2. Okay, and then still you would win. So guys, I hope that this will help you out. This is how you can avoid false breakouts in the market. If you found this valuable, guys, do leave a like on the video, guys. Subscribe to the channel and let us make this reach at least 10k subs. And I'll really be grateful to you guys. Thank you guys for your support. Until next time, peace and out.